Welcome back. Investors should continue to watch very closely earnings season in the United States. The quarter started off strongly with results from major U.S. banks. Our next guest says more upside for U.S. banks should be expected amid the second Trump administration. Let's talk about it further and markets more generally with Anastasia Amoroso, Chief Investment Strategist at ICapital. Anastasia, great to see you. Thank you so much for stopping by. First of all, what's your take on the very positive momentum we've seen in U.S. equity markets this early 2025?
That's right. It is positive indeed, especially after the early day struggle that we had in early January. But the reason why, Paul, it is so positive is because this Trump administration has been incredibly pro-business. And whether you look at financials, whether you look at technology, I think this enthusiasm from the CEOs and from corporate America is palpable. And if you look at some of these early moves, yes, there's discussions of tariffs in the background, but it's really about driving investments to the United States and keeping the tax rates low. So that's been incredibly supportive for sentiment, but it is still early days.
Are markets getting ahead of themselves? The S&P 500 is up about 3.5% so far this year alone.
No, I don't think so. We had a mini reset, Paula, in January where we did have that 3 or 4% pullback. And actually, the equal weight S&P has pulled back by about 7 or 8 percentage points before rebounding back. So, if you look at the conditions today, they're not actually very stretched. They're not overbought. And also what happened in the tail end of December and early January, you did see a number of stakeholders reduce their sort of bullish enthusiasm and bullish positioning. So I actually think we had the right reset. I don't think things are stretched. And, the other thing that's fundamentally supporting stocks here is that earnings season. And as you mentioned, it is starting on a very, very solid footing. You've got 79% of companies that are beating, and the surprise is running at about 9%. So that's very solid. So given all of that, I don't think the market's all that stretched right now.
One sector of the market that you like is U.S. onshoring beneficiaries, companies that will benefit from the trend towards onshoring, and that's related to tariffs. You think tariffs are coming. That story is being watched very closely in this country, as you can imagine. Yeah. And it's very common to hear investment strategists and professional investors say that this is a bargaining position, an opening bargaining position in the United States, and we will see something much more modest than 25%. But you think tariffs are coming, and there will be consequences for companies that beneficial consequences for companies that reshore some of their facilities into the U.S.
Yeah, look, I do think there is a better chance than not that some tariffs are coming on some countries. And the reason I say that is because we've heard from multiple spokespeople from the administration really dismissing this idea that imposing tariffs is going to drive inflation. And so that's one of the reasons why I think they may not be actually afraid to use the tool. And the second reason is we have tax cuts to extend and budget deficits to grapple with. And how do you find money to pay for that? Tariffs could be one of the answers as well. So because of that, I think in some sort of form or fashion, tariffs are coming. Now, I do think the administration will be thoughtful and careful about whether it's a blanket 25% tariff, in this case on Canada, whether it's something else. And I would suspect some significant carve-outs, because if you think about one of the goals of the Trump administration, which is reducing oil prices, having a blanket tariff on energy imports from Canada will fly in the face of that. So I do expect to see some sort of softening of the stance and some sort of resolution, but I don't think every country and every product will have that same favorable outcome.
What do you think of the claim that significant U.S. tariffs on incoming products will not be inflationary in the U.S. economy?
Look, I can see the scenario where that might be the case. First of all, when you look at just the pure math of it, and let's assume there's a 60% tariff on China, let's assume there's a 10% universal tariff, you still end up with an increase in core PC inflation of about 30 basis points. And you say, well, how can that be? And the reason for that is so much of the CPI basket, inflation basket in the United States is services. 65% of this is services, which are not actually imported. And then the host of goods that would be subject to those tariffs would not also be universal as well. So that's why you end up with a somewhat muted impact. I'm also sympathetic to the case that if we do end up with tariffs, we might end up with stronger dollar, which helps offset some of that. And of course, the countries themselves can potentially subsidize outcomes and lower the prices. So I think there is a probability that it doesn't result in severe inflationary pressure. But one thing, Paul, you had asked about, and to come back to it, which is the onshoring beneficiaries, that seems like the clear trend of travel, which is President Trump wants to bring business back to the United States, whether it's business that was originally done here, whether it's new business. And so companies that are producing goods in the United States, I think, will be incentivized and will be rewarded. So that's why you see the onshoring beneficiary basket, for example, outperform the market, I think up about 9% for the month.
There's a lot of focus on the energy sector in light of the second Trump administration as well. And you think the way to play this is the U.S. midstream and particularly the U.S. pipeline stocks?
I do. Something like the Alerian MLP ETF has done quite well. And if you look at the chart of U.S. production, it's actually reached records even under the Biden administration. But if the goal is really to stimulate further production in the United States, which should lower the price of oil, that's not all that beneficial for the integrated or the independent producer, but it's certainly beneficial for the pipelines that will be responsible for getting that oil where that oil needs to go. The other consideration here is the build out of the AI infrastructure and what does it actually take to build out the data center that consumes a tremendous amount of energy, requires a tremendous amount of electricity. So I can see a scenario where you have a co-location of the data center with a power plant and a pipeline that maybe helps transport that oil and natural gas to it. I think that strength that we've seen in the midstream sector could be poised to continue.
Anastasia, thank you so much for this. That's Anastasia Amoroso.